Hello, it's Tuesday the 13th, I'm FX Plue, and it turned out nice again. So despite Boris's plea to act sensibly and responsibly, there was rather a lot of pent-up demand as the pubs, gyms and shops opened for the first time in what seems like forever. But we're back in business again. There's no rest for the wicked though, especially if the economic recovery is to be given the best chance of success. They still need to sort out the issues with the Irish border so trade can flow more freely there. We've got the safety concerns over the vaccines, which will need to be managed appropriately to ensure that the rollout continues at a good pace. And of course, there are still some pretty big questions about how to restore the nation's finances. Sunak may well face calls for further support should the recovery falter and we see unemployment and inflation both start to rise. Industrial and manufacturing output data is expected to remain weak today. This further underlines the importance of the service sector, which thankfully is still propping things up and holding its own. In the market, sterling is hemmed in pretty tight against the dollar in a range between about 136.70 and 137.80. We challenged the high side yesterday, but we ran out of steam around 137.75. But the longer we remain range bound, so a break to one of these levels could trigger a more significant move. The question is, though, in which direction? Over in the US, they're pretty much obsessed with inflation at the moment, and indeed what the Fed plans to do about it. Part of this, of course, has been caused by Fed Chair Powell. Normally, he's very free with his forward guidance, but he's been a little bit more guarded with the details of any plan, and it's giving the market the jitters now that inflation appears to be on the way. Speculation is therefore growing about how high the Fed will allow inflation to rise and how long the temporary rise will be allowed to last. And the longer these questions go unanswered, the stronger the reaction is likely to be when the market finally gets the clarity it craves. In the meantime, the accommodative monetary policy keeps the dollar under a bit of pressure. But even the hint of a rate hike could see the dollar return to levels that we haven't seen in, about 6 months or so. For now, though, euro dollar seems comfortably entrenched around the 119 level, and that 120 level looks a stretch too far. Right, that's it from me. Enjoy the sunshine. Makes a nice change to the snow yesterday. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.